Welcome to TradeTheNBI.com. This is Jones. Report is for the 22nd. Well, yesterday we moved up to the highs from the previous day and then came back down, got close to the ABM. When you're between that 176%, that's why that ABM is nice, because it gives you that middle of the road area from a fill back standpoint. And pretty much what we've done is filled back intraday positive extremes from before. Nothing too dramatic. We saw a breakdown here of the magenta below 33 level and below MBI yellow, so that's net negative. We've already been below with blue under the gray, so we were already in that sort of soft sideways kind of thing. Pretty much clean reset from a DOC steel as far as being underneath, so short-term buyers have the potential to just not doing anything at this particular stage, and that's allowed a little bit of creep up of short cyan here, which is why we saw some of that. And it gets tougher when, like I said, you don't have any short activity at 1.5 here. That's MBI white than doing anything to really press the case from a short standpoint. So it makes it tougher for bulls to drive things higher. You're going to have a big influx of cash to want to do anything. And you get a couple of weeks before an election, you're not going to see a whole lot of that. But the big difference you see here is the NASDAQ finished on the upside for the day versus the S&P. And you can see it's much weaker from an MBI reading standpoint than the S&P has been. I find we're still all in that positive shakeout area and that, but big difference even on the DOC here, where cyan remains under red, so still within the buy category. We're just seeing some momentary softness within that, and that's just part of the play as the election gets closer. People are moving one camp to another, and they're very specific different trades, and you can see that here from a treasury standpoint. Nobody wants a treasury without a much better yield because they can see that inflation is through the roof. So it depends on who you think is going to win, depends on where you think rates are going to go. And at this particular stage, though, you've got to attract some interest, and frankly, it's not related to what the Fed is doing, because the market is saying, no, we demand higher rates in order to invest in what you're offering, because we can see that inflation is not under control in any way, shape, or form. And evidenced by the recent spike we had in oil, finally came back down. You're still way elevated. You're not in an area where you're going to see a stabilization of price increases. We're still in that area where prices are going to continue to rise, just far slower rate. But the inflation of this is still built in until you drop into that 50 range, and you're a long way from there. But it depends on who you think is going to win. And the clear indication from a euro standpoint, despite the fact that it is in a zero growth situation relative to the US, I mean, when you look at the overall output of the EU as a collective bloc, it's paling compared to the US. And that reality means that the euro's been artificially high for quite some time now. In a Trump trade, you would expect that that's going to fall off dramatically, because they're going to have tariffs and other things that are going to further hamper their ability to take advantage of the open market setup, and that's just going to put the euro under further stress. It does impact S&P companies that do get value from that exchange, but you look at it from the secondary view. Gold, we've talked about this for quite some time, when it was in the 1200, 1400, 1600, 2000. Now we're getting close to 3. It's not going to stop, because you're seeing no restraint by any government worldwide other than those in the BRICS, which ironically, you have that BRICS meeting happening in Russia now, where they're trying to move to trade outside of dollars into their relative barter country construct under a new value regime, and that has broad implications. But at this particular stage, you're seeing that investors are saying, hey, we have no faith that there's going to be control in fiat currencies, regardless of what they are. And gold becomes the reliable stability point. Secondary to that, you have crypto. And that's why you've seen the recent purge up here of shorts from crypto, and it's moved into an elevated area. Emergency vehicle running by. And I don't think that that's going to abate anytime soon, because it becomes an alternative store while you're waiting to see if things get stabilized from an inflationary standpoint. And it doesn't look like anyone's trying to restrain that, at least prior to the election. They want to flood as much money, which we all knew, which is why we expected the market to rise as we headed towards the election. who wins makes a big difference as to what trade you're going to be in and how that goes. So ETH still lagging relative to what Bitcoin has been doing. So you see gold and Bitcoin have been the primary drivers. So we had this previous algo level, which, no shock, filled it completely here. We had the NBI white lead that took place the other day and slightly rising, and then we had this clean one. Expectation was moved to 50% on that. It did exactly that intraday, came back, so that was pretty congruent with it. But then it spiked up again in a brief period where the magenta looked like it was going to drive things higher, but then the NBI white started to take the lead, but until you had the breakdown of magenta underneath it. And that's what's led to this most recent move here. We've hit that previous algo, and of course you can see from an intraday standpoint, at least pre-market, they're buying it back up right off that algo level. We should see a move to the 0%, or the 0% needs to rise up and catch it. But either way, one of those two is going to meet, given what we're seeing from this 50K reading here. When we move it to an intraday standpoint, you can see what happened. Pre-market, huge buy up here, clearing out any of the puts that had been activated. Once that happened, then all the call buyers got excited, but then that selling started to wipe them out pretty darn fast. And when the more shorts got activated, they flipped them the other side, and lo and behold, mean reversion right back to where we were. And that's exactly what the market likes to do. It takes advantage of both of those that are looking to get too greedy and wipes them out. Here's what we're seeing from an intraday standpoint. All pretty modest. I don't think there's anything dramatic. Obviously, you have different camps thinking that different things are going to happen with a couple weeks left, and that's part of the excitement. And until that unfolds, you're going to have some back and forth with each side putting money where they think that it's going to give them the best return based on where the political weather is blowing at this particular stage. But it'll be interesting to see what comes from the BRICS setup in that. Not all that relevant from a broad standpoint. I just like to give you the broader view as to why things do some of the things they're doing. But at the end of the day, we just need to look at our paint bars because it clearly sees exactly where the action took place, and it saw the short at the beginning, at the end of yesterday, and followed it all the way through. We've had a couple of brief attempts to try and make some moves, but nothing in the sustained move category, and so it's all pretty clean. Anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.